If you have IRS tax debt, you can completely get rid of the tax debt through the Offer in Compromise program the IRS has. It is also known as the OIC program, and this is part of the Fresh Start Initiatives that the IRS has, which literally gives you a fresh start if you qualify for this. The Offer in Compromise program works this way. Whatever tax debt you have to calculate an offer, which is specifically an amount that you have to tell the IRS you're going to give them. If they accept your offer, then the whole thing gets wiped away clean. Talk about a fresh start, because this is what this program is aimed to give you. A complete fresh start do-over with your IRS tax debt. So the first thing you have to do before you even think about applying for an Offer in Compromise program, you have to go back and analyze what's the reason why you got in tax problems. And you have to fix that problem. You have to fix the root cause. After you have fixed your root cause of the problem, the next step is you have to calculate the Offer in Compromise. The IRS has a great calculator online, an estimate to see if you do qualify. But the best indication is doing the actual calculation on the Form 433A OIC. And the gist of this form is to calculate what the reasonable collection potential is, or to calculate the actual offer you might give the IRS. So it takes a look at your current finances, from your total gross income, net equity and assets, monthly allowable household expenses, and it calculates what that offer is. So if you qualify for an offer, that is the amount that the 433 AOIC will give you. And it also would indicate if you do not qualify for an Offer in Compromise. And don't worry if you don't, because if you have tax debt and don't qualify for the Offer in Compromise, there's a whole list of other tax programs that you may qualify for. When doing the 433 AOIC and you're calculating the offer, make sure you have the list of supporting documents for everything you do put on. So if you're employed, make sure you have your pay stubs. If you're self-employed, make sure you have your profit and loss. Make sure you also have your bank statements. You definitely have to prove what's coming in and what's going out. So if you're an employee, you need about 3 months worth of bank statements. And if you're self-employed or a business owner, you need about 6 months worth of bank statements. You're also going to need everything from your household. So if you're paying on utilities, water bill, gas bill, light bill, make sure you have the proof of all that. Make sure you have proof of assets. If you have any investments, any stocks, bonds, mutual funds, any cryptocurrency, make sure you have a statement that has the fair market value of the current value of whatever you have in those investments. If you also have any type of car payments, you also must include at least 3 months worth of your car statements. Now that you have the offer amount based on the 433 AOIC, that offer amount you carry forward to Form 656. Form 656 is the actual form where you're making the offer to the IRS. You're telling the IRS, I'm going to offer you $5,000, $2,000, $1,500, whatever it is you calculated. Here's where you list it to the IRS. You're going to list on the tax periods, the tax forms, and the amount you're going to offer the IRS. And there's two basic routes of engineering an offer. One is a 24 periodic payment to the IRS. The other is you're saying a lump sum. You're saying, I'm going to give you 20% deposit upon making this offer, and the rest, if accepted, will be paid off in about 5 months. So you have those two options. Now that you have the full packet together, here's how you put it all together before you mailing it off. Type out a basic, simple cover letter. You can even handwrite it out. Just address it to the IRS and say, to whom it is concerned, I am Mr. Taxpayer. I am making this offer in compromise based on my inability to full pay the tax debt that I do owe. I calculated my offer in a 433 AOIC, which is enclosed. My offer amount is X amount. Please find the enclosed checks for the 20% down, or however you're going to do that, plus the application fee that's applicable. And then you go ahead and just say a list of all the supporting documents that you're sending through. Now, since I'm a power of attorney on my clients, I just add, the very first sentence is that I am writing this on behalf of the taxpayer. I'm on the power of attorney, encloses a copy of my power of attorney. Everything else is the same. And at the end, I have the list of enclosures, which is the 433 AOIC, 656, and a list of each supporting document that's being enclosed. The next step would probably be procedure on what to expect next from the Offer in Compromise unit. So what you can expect once you submit this packet, in about 30 days or 30 to 45 days, the IRS will send you that very first notice of saying, hey, we have received your 433 AOIC 656 Offer in Compromise. They give you an offer number assigned, and they say to expect a contact date on such and such date. That date is generally about 6 months down the road on average. So that is when they're going to assign an agent on your case. What sucks right now with what's going on with the IRS, there's a lot of delays. They're delayed, they're backed up. You might have seen some horror stories on some backlog and destruction of documents. So a whole lot of that is going on. And right now what's going on with the Offer in Compromise program, when that 6-month date comes, instead of getting an agent assigned to your case, you're going to get a 90-day delay letter. This 90-day delay letter means that the IRS is backed up. They need about 90 additional days before they assign an agent to your case. And sometimes 90-day passes and another letter comes out and says, hey, we're still backed up. The IRS still needs maybe an additional 90 days. But getting this letter to out of the blue, that IRS agent may come on board. And once this agent comes on board, then you have to basically negotiate the whole thing all over again. The IRS agent will take a look at the packet, everything that's disclosed in all the forms, all the supporting documents, and may ask clarification of certain questions. The agent's job is to make a determination and make a recommendation, either accept or reject. If the IRS rejects your offer in compromise, you do have appeal rights where you submit an appeal within 30 days of the letter of rejection, and you get a second chance and want to deal with the Office of Appeal. Now, if your offer in compromise is recommended for acceptance, it could come from the original offer examiner, or it could come from the Office of Appeals if it was rejected and appealed. And that decision, you have to then stick to the terms of the acceptance, which is pay off the offer amount that you do owe, and then you have to stay out of trouble for the next 5 years through the 5-year probationary period. And if you're ultimately dealing with a rejection, there might be a backup solution that you may qualify for, such as a financial hardship program, a hardship payment plan, or just some alternative solution if the offer in compromise did not work out for you.